The first half of this year, in terms of retail, has all been about the struggles with too much inventory and goods demand going down, and maybe mixed signals about overall consumer health and willingness to spend. What themes are you most focused on coming out of some of these reports this week?
What I want to see is in these reports is the look to the future. I'm all about inventory levels. Inventory levels on the company side, the supply chain disruption caused goods to come in at the inappropriate times. What do inventory levels look like? What is this set up for the promotions as we go through the balance of the year? But one of the surprising things is, in my checks over the past 2 weeks, I've seen an improvement, and it's coming out in some of the numbers. I mean, the lag effect of consumer sentiment, gas prices coming down a little bit. You're beginning to see, especially in the middle of the country, a little bit of a settling out. So that's the surprising thing to me. I think the inventory levels aren't a demand issue in the near term. It's a supply that is the mismatch. And so what is the promotional environment going to look like? How are we going to be set up for the fourth quarter? That's what I'm watching as we hear what earnings are going to look like, what margins are going to look like, and guidance. Because a lot of these stocks, they're down in a multiple range by 25 to 50%. Yet, if the consumer is stabilizing, that's a good thing going forward for these names.
Yeah, I guess the question, if you see some improvement happening, is the warnings from Walmart and Target that have been absorbed by the market to some degree, does it seem like they were sufficiently conservative in their outlooks that people might find some relief in the reports?
They may have been sufficiently conservative, but I think what we're seeing out there is the fact that another downtick, even in terms of guidance for the year, is built into these stock prices. These stocks are down double digits. So the expectation and what we saw last week from some of the companies reporting, the stocks went up on even lowered guidance because the street is ahead of where the guidance is. And the outlook now is, what is 23 and 24 going to look like? Numbers are expected to be bad. Inventory levels are expected to be high. What's happening with the consumer today is what the world is looking at.
Dana, what we need to know for the broader inflation numbers is whether or not we have seen the discounting we're going to get because of the inventory overbuild, or is there still more discounting in the goods sector to come, in your opinion?
I think there's more discounting to come in the goods sector. I think that back to school, for example, while numbers are expected to be up 7.5% to 8.5%, if you include inflation in that, it's really flat. And I think we're first beginning to see the level of promotions coming. That's the concern for third quarter guidance. That's the concern for the year. And in conversations and what we're seeing, I think that's built into some of the stock prices, but you're going to have some surprises. Guidance, for the most part, will be to the downside, not to the upside.
Shepard Smith here. Thanks for watching CNBC on YouTube.